Fibonacci retracements. This tool displays horizontal lines based on Fibonacci numbers, which serve as key support and resistance levels. To use it, identify a swing low and swing high on a chart, then drag the tool from the low to the high. Wait for the price to pull back to one of these levels, ideally the 0.382 Fibonacci level, where reversals often occur. This level can be a good buy entry, but combine it with other signals for better accuracy. Breakout patterns. This occurs when the price makes a sudden and significant movement in one direction, usually after a consolidation period. For example, after consolidating, the price may suddenly drop, signaling a breakout. Traders use patterns like wedges, triangles, and rectangles to identify potential breakouts before they happen. Reversal patterns. These indicate when the price moves against the current trend, forming a countertrend. Patterns such as double tops and bottoms, triple tops and bottoms, and head and shoulders can help predict reversals. Identifying these can provide early signals for trend changes. Elliott wave theory. This theory suggests markets move in a series of 5 waves before reversing. By identifying these waves, labeled 1 to 5 in ABC, traders can predict price movements. Key rules include Wave 2 not being longer than Wave 1 and Wave 3 being the longest. This theory helps in predicting market trends and identifying buy and sell points. Fair value gaps. These occur when there's a significant gap in a candle due to buying or selling imbalances. Identify a candle with a large body and draw a rectangle over the gap between the previous and next candle's wicks. This gap often acts as a magnet, with the price likely to revisit it before continuing its trend. Candlestick patterns. Traders use specific candlestick shapes to analyze future price movements. Notable patterns include engulfing patterns, indicating strong momentum, hammer and shooting star patterns, indicating rejection, and doji patterns, signaling market neutrality. Heikin Ashi. This indicator replaces traditional candlestick charts to reduce noise. A green Heikin Ashi candle signals an uptrend, and a red one signals a downtrend. The size of the candle's body indicates trend strength, with larger bodies showing stronger trends. It acts as an indicator, not showing real market prices. Moon phases. Some traders use moon cycles to time the market, believing these cycles influence human behavior and market trends. A new moon is seen as bullish, while a full moon is bearish. It's used mostly as a confirmation tool. Renko charts. These charts form blocks based on price changes rather than time periods. For instance, a block appears with every 1% price change. Green blocks signal uptrends, and red blocks signal downtrends. Renko charts filter out noise and help identify trends. Harmonic patterns. These advanced patterns use Fibonacci numbers to form specific shapes, predicting future price movements. For example, a bullish bat pattern forms 4 movements shaped like an M. Each point in the pattern has specific guidelines, and traders can use these patterns to identify potential trade entries. Support and resistance. These are key horizontal levels where the price has previously bounced off and may do so again. Support is a level below the current price, where buying may occur, while resistance is above, where selling may occur. Dynamic support and resistance, similar to static levels but using indicators like moving averages as key levels. These levels move with the price, providing more dynamic entry and exit points. Trend lines. These diagonal lines indicate the overall direction of the market. An upward trend line shows bullishness, and a downward trend line shows bearishness. Trend lines can also identify potential entry points when the price retraces to them. Gann angles. This tool displays lines at different angles, acting as key levels and measuring trend strength. Steeper angles indicate stronger trends. To apply Gann angles, lock the price to bar ratio, identify market range swing highs and lows, draw a vertical line and a 45-degree angled line, and then apply the Gann angles tool to measure the trend. Price continue under 45 degrees indicates a weak trend and vice versa. Momentum indicators. These measure trend direction and strength, most effective in trending markets. Notable indicators include MACD, bullish when lines cross upward, bearish when downward. Moving averages, price above signals bullish, below signals bearish. Parabolic SAR, dots below price are bullish, above are bearish. And super trend, green is bullish, red is bearish. Oscillators. These show the relative strength of a price, useful in choppy markets. Key oscillators include RSI, overbought indicates a potential downside reversal, oversold indicates an upside reversal, and stochastic, similar signals with lines crossing over for prediction. Divergences occur when an indicator shows an opposite signal to the price movement, signaling potential trend reversals. For example, if the price forms higher highs, but the MACD shows lower highs, this bearish divergence suggests a possible price drop. Volume indicators. These track trading volumes to show movement strength. Key indicators include price volume, longer bars mean higher volume. VWAP, volume weighted average price, used like a moving average, and volume profiles, horizontal bars indicating key levels. Supply and demand zones. Also called order blocks, these are zones where significant price movements occurred. Demand zones are where price moved up significantly, and supply zones are where it moved down. These act as key levels for potential trade entries. Market structure. Analyzing market behavior and flow, with uptrend structures forming higher highs and lows, and downtrends forming lower highs and lows. Break of structure occurs when price breaks a previous peak, and change of character happens when the price reverses the trend. Did I miss any strategy? Let me know in the comments. If you enjoyed this, please like and subscribe. It means a lot to me. Check out my other videos too. Thanks for watching. See you in the next video.